which is why the world needs, and this is big and really important, an independent money OS. Financial infrastructure that works for workers, not for platforms.
So what do platform workers, these one-person enterprises, actually need? Aman, you and I have talked about these 5 financial primitives, the building blocks of the new money OS. In the industrial age, if the industrial age was the past and the intelligence age is the present, then the current financial system is like the DeLorean only running on plutonium. It was great in 1985, but we need that Mr. Fusion upgrade, something that runs on modern volatility. We need infrastructure that is simply the best through financial infrastructure.
Tina references, keeping the 80s alive. So the 5 primitives we discussed are the ability to see your money, move your money, borrow money, and then grow and protect your money. Let me take a shot at explaining the first, seeing your money. This is about real-time multi-stream visibility. This is more than viewing your balance or transaction. Traditional banking gives you a monthly PDF or statement, but platform workers earn continuously from Uber, Etsy, YouTube, Patreon, name it. They need unified real-time visibility across all income streams, portable across platforms.
That's right, Aman. And right now, if you're earning from, let's say, 5 platforms, you're probably manually tracking 5 dashboards, maybe 3 payment processors, and praying your spreadsheets, assuming you have one, doesn't get corrupted.
And zero ability to forecast. Will I earn 3,000, 7,000 next month? You genuinely don't know. You can't plan rent, groceries, or even your health insurance. What workers need is a unified financial OS that allows you to see all of your money in one place in real time with predictive insights.
Right. Let's move on. Primitive 2 is close to my heart. Moving your money, instant, low-cost, programmable. Uber pays their drivers multiple times daily in some market. Independent workers can't wait 2 weeks for ACH batch settlement from the 1970s. Meanwhile, banks still treat payments like moving gold bars on donkey carts. And when it comes to international payments, that Filipino freelancer working for US client probably uses somewhere that 7 to 10% of just fees and FX spreads. We've shown this in the past. We've talked about this in our real-time episode. Brazil's Pix processes payments in 10 seconds, 24/7 and free. India's UPI handles billions monthly with near zero friction. Real-time rails exist. Banks just need to use them better and more interoperably. And we haven't even touched about programmable money. Now imagine there was a handyman buying materials, and imagine they had this smart contract that's essentially pulled funds directly from the client's escrow account. So he pays absolutely zero out of pocket. The moment the job ends, his income instantly splits between tax, insurance, and any profits get deposited into their bank. He drives home with his accounting finished before even the engine starts. In short, moving money needs to be instant, low cost, programmable, that matches how you actually earn.
Okay, primitive 3, borrowing money or underwriting for volatility. This is where the system, I think, Zubin, really most dramatically fails. Traditional lending asks for payslips. Platform workers have volatility. I'll give you an example. Meet Divya, a YouTuber, 400,000 subscribers, earns about 180 grand last year across AdSense, sponsorships, Patreon. 3 years of consistent growth, and she wants to buy an apartment. The bank says, do you have a W-2? Divya says, I have an analytics dashboard that shows you 3 years of audience growth and revenue. Bank says, we don't underwrite dashboards. The unbankable millionaire moment. The algo says you're a star. The bank says you're invisible. Banks must move from income history to cash flow underwriting. Use platform data, subscriber behavior, client retention, and project pipelines. Price for volatility. Don't pretend it doesn't exist. A creator's payslip is their analytics dashboard. A gig or independent worker's creditworthiness is their earnings patterns across platforms over time. The new economy needs new credit underwriting rules that understand portfolios, volatility, and multi-platform income.
So we saw the C, we saw the move, we saw the borrow, which brings us to primitive 4, which is growing your money. Micro investing, portable pensions. Retirement in the industrial age was work 40 years, get a pension, and retire. In today's intelligence age, 17 different income sources across 40 years. How do you even build a retirement? And the answer cannot be manually transfer money from 7 different platforms to your pension. This needs to be automated. Micro savings across every income stream. Little drips from every gig. Auto-invested, compounding across decades. Uber could auto-save 5% of every ride. YouTube could auto-invest 10% of AdSense. Fiverr could, potentially round up your earnings.
And Zubin, critically, portability. Your pensions can't be locked into Uber. It must travel across platforms, careers, and borders. This is happening slowly. I've been a board advisor to a micro pensions platform called Pinbox for over 4 years. And we're really starting to see the green shoots around this. Singapore is testing, for example, gig economy contributions. France has mandated platform contributions, and the UK is exploring auto-enrollment for platform workers. The future pension contribution isn't monthly, it's continuous.
Right, and that brings us to primitive number 5, which is protecting your money. Insurance for algorithmic risk. Now, if your boss is an algo, you need algorithmic insurance. Income protection looks completely different. And let's play that out, right? Like you need income smoothing, which is essentially buffer for volatile months. You need, potentially platform failure insurance. What happens if YouTube suddenly demonetizes your channel, right? Like now what? You need health coverage that is not tied to one employer. You need algorithmic error protection. What happens if the system miscalculates your pay? And then finally, it's disability coverages that understand multiple income sources. On-demand insurance, parametric triggers, peer-pooled coverage, slice offer per ride insurance, collective pools, freelancers for, group health potentially.
Absolutely, Z. Imagine your income drops 40% for 2 consecutive months. Automatic income smoothing insurance covers 50% of that gap for 6 months while you rebuild. Or you're a YouTuber and YouTube changes its algo and your views drop by 60%. Platform failure insurance compensates you for 3 months while you diversify.
Aman, while we were prepping for this, one of the things we talked about was parametric insurance already works for weather in agriculture, right? Think of smart contracts can trigger payouts based on verifiable data. And so to sum it up, that's the 5th primitive, right? Protection that matches algorithmically managed multi-platform work.
So shifting gears, here's the core issue, Zubin. The money OS was built for individuals and large employers, the historic one. Everything flows from employment. Your bank account, health insurance, pension, credit scores, even your mortgage eligibility.
Yeah, maddening, right? And in the world where independent workers have multiple income sources, no single employer, and careers that potentially even look like just stock charts, that system is structurally obsolete.
The money OS must pivot from employer-centric to individual, or even in entity-centric. From static to dynamic, from monthly to continuous, from payslips to patterns.
You know what, Aman, and we've talked a lot about banks, and to us, the banks that do evolve will evolve from being just deposit vaults to identity engines. Instant powering entities at scale, from that rigid underwriting to behavioral lending, from employer-linked benefits to worker-linked benefits, and potentially from monthly statements to real-time life graphs.
The banks that win will say, we see your multi-platform income. We understand your volatility. We're smoothing out your cash flow, growing your wealth, protecting your downside. And that's not charity. By 2030, there will be 2 billion independent workers globally. That's a multi-trillion-dollar market opportunity.